This episode of the Old Dogs REI Network is brought to you by Mino Studio.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is a show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, we have a fun show for you today. We've got two brothers here, and this is real exciting here because both these guys are real estate professionals, although they have many other skills to their name, and you'll find out more about that as I introduce them. First brother I'm going to at least give you the background on is Thomas Black. He's an MD. Tom Black is board certified in emergency medicine. Prior to graduation from medical school, he worked for Wells Fargo Financial, overseeing the residential mortgage loans. He and his wife, Michaela, who is a licensed realtor in Texas, have owned numerous single and multifamily assets and are well-versed in foreclosure acquisitions. The couple has designed, developed, and stabilized A-class assets in Texas. Tom is the author of the book, The Passive Income Physician, an active blogger in the healthcare community, and passionate about translating high net worth individuals through passive real estate investing. Tim, his brother, has spent his 30-year career at Six Flags theme parks and Great Wolf resorts. Throughout this 30-year span, Tim became well-versed in operations, strategic planning, marketing, sales, revenue management, and real estate development. He is the former chief operating officer for Great Wolf Resorts, which owns 14 resort properties in North America. Tim worked closely with private equity to develop new resorts, maximize revenue through pricing and demand, digital marketing, and implementing new revenue streams. Well, welcome, Tom and Tim, to the Old Dogs REI Network.
Thank you so much, Bill. Great to be here.
It's good to be here. I'm an old dog myself, so I feel right at home.
All right. Well, we're just going to have to just coach that young pup Tom, your little brother.
Yeah. Okay. That's right.
Well, you guys have had. It looks like you've had other careers that you've done really well in, but you also have this real estate investing enterprise here. I just kind of want to hear, how did this all happen? I mean, how did you guys get involved in real estate investing?
Gotcha. I'll take that one. This one is the young pup, Tom. So about a decade ago or so, maybe a little bit more than that, I was coming out of emergency medicine residency training. Bright-eyed and bushy-tailed, had the world by its tail, and got into a really busy clinical practice. After having been in 12 years of school and really working really, really hard to make this dream come true of being a physician and what I thought life was going to be, found myself in a private democratic practice, working excessive hours a week, essentially trading time for money. And that concept of retirement and really enjoying what I was doing just seemed to fade really, really quickly. What had happened is as working many nights in the emergency room and things, I just needed something other mentally to get me by. And I had the fortune of leaving residency and renting my house there to another incoming resident. And it was something that really just sparked a flame inside me. And so we started to buy up, different rental homes and things. And I found it fascinating. The more I did it, the more I read, and the more I read, the more I enjoyed, and medicine started to seem to kind of slowly take a back seat to the business aspect of not only real estate, but medicine too. So I had found a small area in the East Texas area where I was living at the time, a piece of foreclosed land, and just decided to go for it one day and built a small apartment complex with my wife and a business partner. And that was the bug that I got bit by, and we turned around and it's been going ever since. So
wow,
it's been pretty amazing.
Jumped into construction. Had you had any experience in doing that before?
Not a one. And I kind of have this theory about, I joined the Navy at age 17 and left home, having never been able to get into college. I was kind of a less than stellar high school student. And what I learned in those early days in the Navy was that, you get put in situations that you may not be expecting, but you have to make the best of it. And grinding decks and working in the kitchen and doing things out in the Navy in the middle of the Persian Gulf taught me some valuable lessons on, if you're going to do something, you do it to the best of your ability and just jump in head first. And that was my theory, and has been my theory with everything. Of course, I research everything to an absolute, the smallest capacity, but at some point you have to just hold your breath and jump. And I've been fortunate that's paid dividends. It's not without mistakes, and realizing that mistakes are great at, life's greatest lesson and teacher. So unfortunately, life, gives you the punishment first and then teaches you the lessons later. So.
Wow. Well, that's, that is definitely jumping in with both feet. Just, wow. Construction, man. Yeah. And development. So you built this first property. You got it cash flowing, I assume. At that point, was there sort of that light bulb moment where you just said, boom, this is really where I need to be?
Oh, absolutely. I would spend nights out in this, from taking raw land and developing the 18 multifamily units that we did, all the way through phases of construction. And I handled a lot of the fiscal responsibilities. I had a business partner that was a home builder. And so he, of course, did a lot of the other, a lot of the legwork when it came to the drafting, the designs, and a lot of the city issues. But I found myself out there almost nightly after work, walking through, just thinking, this is where I want to be. From the stabilization aspect, like you said, it was, yes, we definitely went from the ground up and then stabilized, and we actually only held on to it for about 18 months, just because what real estate was doing in that area and what I really wanted to do. And so we ended up selling it and doing very, very well, but learning not only the development side, but the operational side too, with the lease up, and then the stabilization, and certainly cash flow was great. But we self-managed that to a point where we got it to 100% occupancy, and then sold it after about a 4-month period.
And Bill, I assure you that during this time, everybody, including his immediate family, asked him if he needed his head examined when he went into this. And he took
Do you
me
know a
out there to
good
look
psychiatrist?
This piece of land, and I was like, "Do you need your head examined?" But I think that the real lesson here is that back to studying and understanding and jumping in with 2 feet. Tom kind of runs towards fear, and most people run away from fear. Fortunately, for him and for us, every time we jump, we pull our parachute ripcord and we land safely. And that comes with a lot of deliberate thought and process and diligence on any acquisition that we're going to make.
Is it really interesting when I looked at both of your bios and I was looking at them? I go, why doesn't Tom have the the book, The Passive Income Physician? And after you just told me that, I thought this is anything but passive. I mean, building from the ground up, self-managing. I'm going, this is not passive.
Right.
Maybe that's why you didn't
let me qualify that a little bit. So
Okay.
so that was the education that got me to where I am. So that was the hard knocks of. Now, I'm glazing over all the ridiculous phone calls and the lightning storms that hit power line. I mean, there's a lot that went into that. And that's where I really learned, okay, this is great, but no, if you were asking me right now if I'd ever do a development again, that's not going to happen. That takes a specialized arm. It was great. It was lucky. It's not something I would do again, though, without a specialized team. So to that note, we only look at stabilized assets.
Okay. Thanks for clarifying that. That's great.
Yeah.
Well, you guys, Tom, sounds like you kind of got started, and then at some point, your brother got involved, right? So, or did he come in there to try and help you, just like maybe rescue you?
No, actually, after we sold that complex, that was where the light bulb went off, and I said, you know what? I had enough people that saw what I was doing. I was still buying rent houses. I actually made, and I remember talking to Tim several times, and I was really unhappy as a physician, trading my money for time and working a lot of hours. I've got 4 small children, and they didn't expect me to be at their baseball practices and things. And I was just really not happy with where my life had been for the amount of time and effort that I had sought for that goal. So I decided one day to resign. I was a full partner in a private practice, and I resigned. I just told my wife, and she supported me, and I said, we're moving to Dallas. I really want to look into other opportunities and, of course, still practice a little bit. But we up and moved and came to the Dallas-Fort Worth area, and I really started looking at real estate as a more full-time, something that I could do with the potential moving forward. And at that time, Tim was the chief operations officer of Grey Wolf, and was still, doing some private equity deals and trying to turn that company several times. And so he was watching what I was doing. But we went in, and my wife and I, our first community we bought was a 305-unit complex in Arlington, which we paid just less than $13 million, and we syndicated it. So we raised about $3.5 million of investor money. And happy to say that's only been 2 years now, and we have an offer right now that we're getting ready to accept at just over $20 million. So we've done very, very well.
You do not do anything small. This is crazy. The first thing you buy is a 302 million.
Right.
A 302 unit?
Right.
And you syndicate. Had you ever syndicated before?
No, and that's what the fascinating part was, because I knew that I knew all the pieces of the puzzle in Longview. I had gotten this education. I knew I was confident enough to be able to put this together, and I had people tracking and following along with me doing a lot of these things. But to me, the actual piece of that puzzle that I was missing is, the subscription agreement and the private placement. I couldn't figure out how to do that. I mean, the amazing thing about East Texas was that the education that I received of being a physician was great, but everybody in that community, it was almost like stepping back in time 40, 50 years where, I had many, many friends that weren't college educated, that were gas station owners or, had sold pipe for oil fields, and they were making millions and millions of dollars and working 30 hours a week and really loving their life. And so what it showed me was there's this different life out there, that it's not how hard you work, but it's how smart you work. And I found it really a lot of passion in showing other doctors and other people that did invest with me that there's a lot of ways to do things, and maybe mutual funds and stocks and things aren't the way to go because of all the hidden fees and just the, with cash flow, with appreciation, with depreciation, which is huge to physicians that they're in a very high income tax bracket. No, when I go big, I research everything just like Tim said, and we've fortunately have done very well, very, very well.
Yeah, and I think there's a thread here between that a asset that he built, that small units, and the property in Arlington, and that there's a real long track record of single family homes, buying those, renting them up, with a crush of the economy, turning them, selling them, and then some, very small duplex properties also.
Oh, yes.
So there was progression up to, the property in Arlington, which has really brought us, to today where we have just over $70 million worth of multifamily assets in Dallas, Fort Worth, Tulsa, Oklahoma, in Atlanta, Georgia. We just closed on our second property in Atlanta. We've got almost 400 doors there now. And then we have a few small properties up in Madison, Wisconsin.
Wonderful Madison.
Where'd you guys grow up? I mean, as kids.
Oh, good question.
Well, that's kind of an interesting story. So our dad worked for IBM, better known as I've Been Moved. So, both of us were born in Chicago. And then when I was 10, Tom was much younger. I think he was probably still in cloth diapers.
Still am.
We moved, still am, right, to Fort Wayne, Indiana. So we were kind of Midwest folks. I left my parents, or they left me in Oklahoma City, and then they moved to Dallas, and that's ultimately where Tom graduated from high school, and I graduated in Oklahoma City, and our lives kind of split there for the last 30 years up until a year and a half ago when we formed the company and kind of came back together.
Now, Tim, you're an old dog, so you understand me a little bit better than Tom. We just had to let's be honest about this. No, I'm just kidding. Okay. No, but 30 years at this company. You're probably approaching retirement, or you're probably looking at. I mean, I've served my time. You must have looked at this a lot differently than Tom, obviously, because Tom's a young pup. He's still got all this energy and all this other stuff going for him. And were you when you started talking about this, forming this company, were you looking at this as this next phase, sort of a retirement, post-retirement move?
Yeah, that's a great question. So, 18 years at Six Flags, where I ran several of their parks, and then the last 12 as the chief operating officer at Great Wolf. We sold the company twice to private equity. So I was very used to private equity, and these are, some of the world's largest private equity firms that own the company. And I quickly figured out that I was on the wrong side of the table. I wanted to be on the private equity side of the table, and fortunately, I've been blessed where I had ownership in the company, and not to be specific, but March 11th of 2016, I retired. We opened up the last property, which was in Anaheim, California, just up the way from where you're at, Bill.
Yeah, and that street.
That was my last hurrah. And then I walked away, and at the time I was 51, and have a daughter in college and one in high school, and really thought, okay, I need to take some time off and think about my life a little bit. And I've been blessed and fortunate to be in this position, and have been watching Tom. I mean, quite honestly, I've invested with him in some of the other deals that he is in and done very well. And took some time off, and we kind of looked at each other and said, boy, I think we've got something here. Tom has really developed this unbelievable database of physicians. 90% of them are physicians. Many of them are retired, and a number of executives that are working and retired. So we decided to form the company, and I am bringing kind of the building blocks together. And Tom is the passive income physician and is kind of out telling our story and really telling the story of creating lifetime cash flow through, passive income. And that's really kind of what our story is, and educating our investors that there is a better way to invest. And so where Tom is kind of out in front in many ways, I'm behind the curtain and just trying to build the blocks of what we're doing is creating a brand, and a company that we can continue to grow and build upon.
Now, have you guys ever heard of the book Rocket Fuel? I don't know if it.
I have not.
Okay,
I have not.
It's just a real interesting book. I'm in the middle of it. Actually, almost done with it, and it's all about this study. They study tons of companies, from all different stages, from the very smallest to some larger. I think they go up to like $20 million companies, and in it, they talk about this. One of the things that's really sort of a key element that's in a lot of these really successful companies, from Steve, Jobs and Wozniak to, these others dynamic duels that existed, is the idea of what they call an integrator and a visionary. And the integrator being the person that knows how to make everything work. The visionary just has, a lot of ideas, but really isn't real good at implementing.
Yeah.
Now, I don't know, maybe, and sometimes you get people.
No, you're spot on with you're spot on with where you're going. I was just, before you even brought that up, I was about to say I have, and having lived with my brother for a number of years, and him being a decade older than I am, he left at a fairly early age, and I was probably only 8 or 9 years old. So I would say, since we formed the company these past few years, I've seen him more than I have in my entire life. And it's funny that I, even having known him all that time, and us going in very, very separate professional directions, I have learned a huge respect for what he's done, and his skill set and how to organize in operations. Very much to the point that I never would have gotten here. And I know I'm all over the place. I mean, I can't even get one organized thought out sometimes. And he is very methodical about taking that and talking and saying, okay, here's where we need to do this. So it's definitely a great team, and very, very centered on what you just said. It is fun. I'm always full speed ahead.
It's almost a little scary in the sense that, we've never really had this conversation. I mean, we have had a couple times, but there's this natural place for us to go. Tom definitely, he'll throw gum on the wall and see if it sticks. And, I'm the one flicking the gum off the wall saying it's going to take a little longer than that. But it's so much fun, and we're learning from each other. I mean, to my point, what I've learned from Tom is that, run towards fear. And I've, my whole career, I've kind of like moved away from it and be risk adverse. Part of it is, but maybe because I'm an old dog. But, I've been trying to mitigate risk. And I think that, if there's anything I've learned from him, some risk is okay, and just be thoughtful and deliberate about it. But the yin and yang is definitely.
It's funny. We view risk very differently, in that I view stocks and mutual funds very, very risky, is what he would probably say 3 years ago he would have too. And I look at real estate and what I know and what I can hold to be true as not risky whatsoever. So if it can be calculated, if it's scientific, if I can actually predict, that's much better than going into something that I have no control over. We can talk about PE ratios till the cows come home, but or anything else about a company, but I don't have any transparency with them. And so that's why we're so intact and intrigued with the fact that with Nepali Capital, one of our biggest things is education. I mean, we talk to physicians and other professionals probably 5-6 times a week, and we do it just because we love it, because I love showing people that there's another way that maybe they didn't know. And I look at it as just not risky whatsoever at all.
It's really interesting because when I read your bios and I was looking at it, I said, it's in Tim with strategic planning, marketing, sales, revenue management. And then I was, looking at you and your background. Now, granted, to do what you had to do in medicine, you definitely have to have your technical stuff down. But it's I could see the blend, and you guys got to read that book. I think you would love it. There's even a little
technical. Definitely, I'm definitely going to get it.
It also has like advice for people in those roles, how to work better with each other too. I don't know. It's a great book anyway. But anyway, I'm not here to sell this book. but I just, of course, 20% of sales may benefit Old Dogs Network here. No, I'm just kidding. But you guys have taken this thing and you've grown. It's really funny because as you're mentioning the places you've lived, and I went to your website when I was looking at it, and those are also the places that you have properties, right? And I was looking at at Madison and San Antonio, and what else you mentioned, Oklahoma or something, or all these different
Tulsa.
And you guys had these properties in these different areas. But I mean, you've grown this company significantly in a short period of time, which is pretty amazing stuff, even for the most talented investors out there. Just jumping into this and really, going in the direction that you've been going for not a long period of time here. Did you ever encounter any mistakes, or one that you would say really rings as one that just boom, this is one we should have seen it coming?
Yeah, I would say along those lines before that, one of the things I want to say about, if you'll notice that trend of where we've been, it's because we look in terms of the assets and go really deep. Where do we know? We're not schizophrenic about just buying things all over the United States. We've got very specific parameters, and it just happens to be that the reason that is because we've lived there, or we know someone in that market, so that we concentrate on those areas, and then when it's time to move on, then we definitely will do that. But there's definitely a method to that madness. So what I will say about the biggest mistake, and yes, mistakes are good, I think, as long as, number one, you don't repeat them, and number two, you minimize any collateral damage that you have. I think the biggest things I've learned, and even though I'm more of the visionary side, and we talk about running towards fear, I still, I'm very, very cautious and definitely don't want to make large mistakes. But I would say the one I did would be I had thinking that lightning would strike twice doing a development. I went to the city next to where I developed, and I tried to rezone some property for a very, very nice kind of a condo type look, and that didn't go over very well. There was a lot of old dogs living in the neighborhood next to the property that I bought, and I was in the newspaper as the evil doctor developer. I learned a lot of really good lessons that attorneys in some can be good to speak on your behalf. Having showed up at a lot of city hall meetings, things like that, it's funny how angry mobs and rumors can be spread very quickly just based on something that's not reality. So, I mean, what we were planning on building there was very, very nice, and in fact, nicer than most homes around that area. But things got wildly out of control, and I learned a very good lesson about development and rezoning of property and a lot of the particulars about city council and things like that. And I am not destined to ever make that mistake again. So I will not be doing any rezoning. If anybody ever comes to me with a rezoning property, and it's been several over the last year, I just roll my eyes and say, until you get this thing rezoned, I don't know, you can come back to me when you're done. So
how long did that process go?
Well, what's funny is I thought I had two of the city councilmen that knew me and the mayor also, and they were very, very pro-development in there. The town needed it. It was going to be a great thing. But, and it had all but assured me that was going to happen. I mean, it probably took about 6 months, and finally I just gave up on it. I mean, I just got to the point where it wasn't worth the hassle, and we're not talking about a lot of money. But I ended up selling it, putting it on the market, and then selling it back to one of the ardent folks against it, because his lot backed up to it, and I happily sold it back to him. So I would say 6 months to 8 months, or probably something like that.
Wow, he's probably planning a skyscraper for that property right now.
Yeah, right. No,
Yeah, exactly.
Yeah, no, they didn't want anything built there. It was a smaller East Texas town. They wanted nothing to do with growth. So, which is understandable. If I was in their shoes, I totally get it. But that's one of the things. You look at all sides of the equation before you make any decisions.
Oh, sure. Yeah, those old dogs will wear you down. I'll tell you. Just
oh yeah.
Well, conversely, what would you say has been your biggest success since you guys started off together?
I think just the partnership itself and our relationship has changed the dynamic of everything, the way we look at things. I'd say that's our biggest success. Secondary, our biggest financial success, I'd say, is that the very first syndication, the very first large syndication that I did, we're getting ready to turn about 180% return in 2 years to our investors. Typically our returns are, a double-digit cash on cash, and we always earmark, or we underwrite for a 5-year 100% return, or 20% IRR. So anytime we go above and beyond that, I look at that as a big win. But we knew we were buying this right. We knew we were doing it right. We still underwrote it very, very conservatively. It just happened a lot faster with cap rate compression and the boom that Dallas-Fort Worth is seeing. So it's been really fun to see that. And fortunately, we've sold some other commercial assets and done very well. So I'd say that one definitely financially has been our biggest success.
For sure.
Oh, that's great. That's a great area. I would have loved to have gotten in there about 5 years ago. It's just a super area. There's some great stuff going on there. Now, you mentioned too about the 5-year. Just a question: do you always sell, or have you ever had a property where the 5 years have come and you're saying, this is a great property, I don't want to get rid of this, and do sort of a cash out and pay off your investors and keep it?
Right, do a supplemental and do that. Yeah, we haven't gotten to that point, fortunately. I mean, I think on this project, this was just that, the cap rates had fallen too much that we were sitting on, a tremendous amount of equity. And for us not to take, a $13 million, we had a debt service of 11 for an offer of over 20. It was hard to look at that, kind of a gift horse in the mouth. Great property, but the thing that concerned me the most is where are the cap rates going to go? We always underwrite for a cap rate that's going to be higher at exit than what we purchase at, just to be extra conservative. And I would say in the future, no. I think we just use 5 years as a very nice litmus to say, where do we think the property is going to be? What we usually do is we don't do any sort of general partner, limited partner. All of our properties at this point are all LLCs, so everybody's an individual owner, and we always put it out for a vote. Fortunately, on this last deal, we had 100% that decided to sell, but majority rules. If it was a borderline deal and it's still a great cash flowing entity, then I love depreciation and I want to hold on to the property as much as everybody is making money. So unless there's some sort of a crux that we need to sell, we wanted to sell, or that, no, I'm not averse to holding properties at all. But again, it's up to the investor group, depending on how many investors are in there and what their decision is. I look at Tim and I as being asset managers, and our job is to educate everybody, and may provide guidance and insight into where we think everything's going. But at the end of the day, it's not our decision.
Right. No, I understand. Well, most of our listeners, or at least our target audience, are folks that are 50 plus. Some are approaching retirement, others are already in retirement, and they're concerned about their retirement years, and they're starting off a little bit late in the game in many cases, and they're looking at real estate investing as a means to even bring maybe just a little bit of supplement to their existing, maybe some longevity because they don't know how long their funds will last them. Others, want to build something. What kind of advice would you have for those listening that are in that situation right now?
Tim, I'll let you. I've got specific thoughts on that, but why don't you tackle that one?
Yeah, great question. I mean, I was thinking as you were asking, Tom, what biggest mistake and biggest success, and for me personally, outside of Poly Capital, probably the biggest mistake, and I'm speaking to your audience here, is I didn't invest in real estate soon enough.
Yes.
I should have done it earlier in life, but I'm glad at the same time that I did it at age 49 at the time. So. I would highly encourage, all the old dogs out there to, continue to educate yourself and listen to these podcasts. I have kind of completely flipped positions, and that is that I would much rather invest in hard assets, in real estate, versus, stock funds, mutual funds, things like that. I mean, let's face it, you get your statements and you kind of look at them, and everybody's got that same look on their face saying, wow, I just made 3 or 4% of my money. It's never that impressive. So I would just say, definitely educate yourself and invest. Take a chunk of money and, whatever is comfortable for each particular person, and invest it in real estate. I think it's also a lot more fun in terms of, you own a piece of an asset and a property. And, what we do for our investors is every month, obviously, we give them whatever property that they own a really comprehensive update. Number one, we pass the financials straight through from our management company. We pass the rent roll straight through, but then we're upgrading the properties. We spend a fair amount of capital to improve them. And we pass through a ton of pictures so that they can see kind of the before and after. And I'll tell you, a lot of people really like that. And as part of our mission, and that is to educate our investors, we also send out kind of an Investor Insights monthly newsletter. And it's generally kind of what Napali Capital's done the last 30 days, what we're doing moving forward. But it has a significant amount of information on particular markets and economies when it comes to real estate, and just different avenues and periodicals that they can educate themselves on when it comes to investing in this space.
That's great.
And I would say there's particularly two types of investors that I come across of, especially in the physician and kind of the professional worlds. Somebody that's just an equity investor and somebody that's a cash flow investor. And we definitely know, most of our retired folks, and in fact, next week we've got a trip down to Austin. We do a biannual kind of an investor appreciation update. And a lot of our folks down there are retired, and they look more at the cash on cash than a future equity kind of a position. So it's less concerning, even though we like to hit both those marks. It's more concerning for them to get a larger cash portion, per quarter than maybe the 102 or the 115%. They would rather sacrifice that, and because it's more stable and it's more predictable for them.
Yeah, that's a really good point.
And it's also kind of fun that a couple of very good friends of mine who I worked with in a former career, who are old dogs now, have invested with us, and just as recent as yesterday, the Napali Capital envelope showed up, and actually my former CEO at Great Wolf, saw a 10% quarterly distribution on her investment in a property in Fort Worth, and it just tickles them to get these checks in the mail, and she just thinks that it's better, the greatest thing since sliced bread. It's funny the motivation when people get those and their response.
Yeah, I mean, there's something to that. I have stock in Apple, but am I going to go to the Apple headquarters, walk in there and say, here's my company, this is, these are my people, I mean, walk around and throw me out,
Right.
I mean, but when you own a chunk of real estate, it's real, it's tangible, it's not going to go away. It's not, there's not all these nefarious, outside influences that affect the value of that. I mean, it's what it is. It's always going to have value. It's always going to be, it may go up or down. That can happen in any market, but overall, it's going to go up, and it's solid. Something you can see. I don't know. To me, there's just no comparison, between that, the real estate investment and stocks and bonds and annuities and on.
Yeah, I think we're all in agreement on that one. That's for sure.
Yeah.
Right.
Well, what do you guys see? You've got this great little business that you've built up here, and what really excites you about your future? What do you guys? What's ahead for your company?
Gotcha. Again, funny you mention that, because we've got our yearly planning session coming up, and we've been going back and forth on kind of our 2018 goals. And I look at this as growth. I mean, I look at it as I would love to be able to do things like, magazine articles, awards, education. What is our litmus for our investors to see what our growth is? And I'm kind of more the big picture. And Tim, I'll let you jump in, because Tim's all about how do we maximize our revenue for our investors. What specifically, we just recently integrated a software platform. And that's been kind of a neat thing, so investors can log onto our website and see, what their share is and access, through a portal where their distributions are. So next year's going to be really interesting. I'll have Tim talk to, because he specifically for a couple of our goals, he's going to be very integrative.
Yeah. No, I mean, this is Bill, really at least for me, the fun part of the business, right, is building it. And as I look back at, where we were at a year and a half ago, we're being as deliberate as we can to archive through pictures kind of what we were when we started day one and what we are today, because I think, you want to be able to tell a story. And the one thing that's very important to me is to have a common thread of consistency through the organization. So when we're thinking about our business planning goals, Tom does talk about, magazine articles and awards and things like that, which makes sense when you think about, how Tom thinks about the business too. I look at those and say, well, those are laggards. That if we do A, B, and C before, the awards, the magazine articles, and those things will come that if we build the right, foundation and building blocks in terms of the right, public relations and communications platforms and revenue management systems, and if we think differently about revenue management, those things will naturally come. So again, that's why I think that our partnership together really works very, very well. One of the big endeavors that we are going to take on next year is acquiring a limited or select service hotel. Because of my background with Great Wolf, something that's 100 to 150 doors in a really great market, but is a distressed asset that has a flag on it. So a Marriott Residence Inn, a Courtyard, of those type of brands. Hilton has a bunch too. Sort of Starwood. So those properties are out there that will return really nice to our investors, double digits, cash on cash with a, 20% IRR over 5 years. So, we like that space. We're going to jump in and learn it. I certainly know it, but I think that it's a great investment to diversify our portfolio a little bit, knowing that multifamily will always be, near and dear to our heart and the number one thing that we do. But we do think that there's an opportunity in the hospitality space.
That's great. One of the things that we've actually done at one of our apartments is we actually converted a few units over to Airbnb because, I have some studios and efficiency, so they have a higher turnover than the 1, 2 bedroom, 3 bedroom apartments, and so to make up for that gap, cash flow wise, we started doing Airbnb. That's a growing reality right now in the hospitality arena right now. I don't know if that's something that you're looking at or not, but I know that there are folks that stay at our place that would look at, the Residence Inn and places like this, because we only do like 30-day stays. Things are changing so rapidly. It's one of those areas where, I would really look real careful in terms of the, just the changing tide there. If there is a changing tide, there's always going to be
for sure
a need for a certain type of hotel. I mean, you're never, not going to ever replace what you can get in a hotel. But would I buy a taxi company right now, in light of Uber? And I doubt it. Right. Yeah. But, that's how fast things are changing out there. And so I know that,
crazy.
The one thing that I know, is that people are always going to need a place to live. And even in the worst economic times, they're going to need a place to live. And so that, that to me seems pretty solid. But at the same time, I stay in hotels or whatever when I travel. So I don't really want to stay in an Airbnb. That's I like having the room service if I want it, or I like having the the benefits you can only have in a hotel. So I know that there are just all these changing dynamics that we have to monitor, no matter what industry we're in.
One of the things we look at when we really like, and when he says distressed assets in areas, you have to do exactly like you said. What are the fundamentals? Is there change? And I think one of the big fundamentals with this limited and select service is near those corporate areas or airports, things like that, where Airbnb would be difficult to maybe tackle that kind of an instance. But yeah, you're exactly right. And one of the limiting kind of operational factors is that, or the barrier to entry in this space is operations, right? And that's where Tim comes in, is such a huge feather in our cap. Is multifamily, you can contract that third party, and we do, and have a great relationship. But let's face it, there's not many really good hotel. There's probably 2 or 3, Tim, that do that, and operationally, that's going to make the huge difference.
Oh, that's great. That's exciting.
It is, and one thing that you touched on, Bill, that I think is important that your listeners hear clearly, is that when you think about multifamily and people always need places to live, there is a significant lack of affordable housing in this country, and that's only going to get worse. And that's why investing in multifamily makes a lot of sense, and it's growing, as you know. Obviously you see, especially in your state, there's a significant lack of affordable housing, and that's definitely moved across the United States. So that's another reason why we love multifamily and investing in multifamily.
Yeah, and you've got this big block of millennials and X generation, or whatever, that have no interest in buying houses, you know?
Yeah,
and so
crazy.
Yeah, so you got this huge, baby boomer. This is where us old dogs sit in the baby boomer bubble that's just moving along. And these people are, a lot of them are getting rid of their big homes. Their kids are all gone. They're even they're moving, and they may move into a condo. They may move into an apartment, but people are simplifying. And so you've got that big bubble. Then you've got the millennials that are also, looking for places to live. They don't want to be tied down to a mortgage payment. So this is, I think the multifamily space is just.
Yeah, it's definitely a trickle down effect to the B and C class assets. I mean, it's workforce housing. It's not going to go anywhere. It really isn't.
Exactly.
So, yeah.
Our time is zipping by, and it's really frustrating because I could talk to you guys. I think you guys are a hoot, man. No, you guys are just like going like gangbusters here. It's really exciting to hear you talk and about the plans you have. But we're I want to respect your time, and we have what we call our wrap it up session that we have near the end of the show, where I ask a series of quick questions, and this will be interesting to see how two guys respond to this, but we'll give it our best shot. If you guys are ready, I'm just going to go ahead and start firing these questions at you.
Go for it.
Launch missiles.
All right, here we go. Let's wrap it up. Favorite real estate book?
Oh, well, by God, wouldn't that be The Passive Income Physician?
It's supposed to be in parentheses, other than your own, Tom.
Oh, okay, gotcha, okay. I'll have to say, and this is going to be so... I bet you 95% of people say this. I'm going to have to say Rich Dad, Poor Dad, Robert Kiyosaki. The fundamentals.
Tim, are you?
Yeah, and I would too. Unfortunately, I would too, mainly because Tom passed it to me right away, and the light bulb went off. But it is a bit of a cliche, but, we're all honest, so that's mine as well.
Okay,
Yep.
Here's a little tougher one. Favorite business book?
Tim Ferriss, Tools of Titans.
Ooh. I thought you could say 4-hour work week, but it doesn't sound like you're doing a
There you
4-hour
go.
work week.
There you go.
All right, good.
Oh, man, you caught me on that one. I just finished reading The Art of the Deal.
Yeah, the same here.
I enjoyed it.
Yeah, it was a
I enjoyed
great
it.
book. Great book for anybody in real
It
estate.
was.
Yeah. All right, most valuable website for success other than your own?
Man, Google. I don't know. That's a tough one. I find little bits and pieces here and there.
That's a good one. I would probably just say Apple because I'm an Apple fiend. Everything in my life revolves around Apple. But that is a good one.
Do you find like
this old dog
when you're researching properties or anything?
Exactly. That's a CoStar. CoStar's got to be the one that we'd use the most.
Getting your data, your market data, and all that stuff.
Mining data out of CoStar for comps, looking in the area and seeing what rents are doing. That's where we're going to, that'd be it.
Cool. Okay. Favorite app?
Slide-Dial?
It's called Slide-Dial?
Yeah, this is kind of tongue-in-cheek, though, Bill, a little bit.
Okay.
But, so on the physician side of things, I still run a physician group of about 90 doctors, and I run 8 hospitals, the emergency department. And Slide-Dial is an app where I can set to record a message or do what I need to do without calling somebody directly. So if I want to get a mass number of people, I can list all their phone numbers and then do a message, and it will just go straight to their voicemail. So if you want to just ever go straight to somebody's voicemail without having to talk to somebody, or you can have it set up to do a Monday morning, whatever, announcements or things like that, so they could listen to it at their own time, then that's what Slide-Dial's for.
Very cool. Slide-Dial? Is that I-L-E?
Slide, S-L-Y-D-I-A-L, Slide-Dial.
Slide-Dial. Okay, gotcha.
Yeah.
Okay, gotcha.
Yeah, mine's going to be, and you're probably going to laugh at this, Tiny Scanner.
Oh, yes, that's a good one. That is a good one, man. I should have thought of that.
Oh, that's great.
All I know is that it seems like PDFing everything in this world is so important, and everybody expects it now, no matter where you're at. So I tend to use Tiny Scanner.
Yeah.
That's great. I don't have the same one, but I do have a scanner. That converts to PDF on my phone too. Yeah, that's great.
Yeah.
How about favorite quote?
Oh man, I have a couple that tie into one another from East Texas, from the banker that sold me that property. He just basically, I was, as you can imagine, quite nervous going into the bank, buying this piece of real estate, getting ready to do things on. And he noticed how hesitant I was, and he said, "Son, you may not make as much money as you think, but you're going to make money." So that was one. And then my business partner on that deal says, his famous quote is, you can't make silk out of a sow's ear. So you can't make something that it's not to begin with. So
That's great. Great.
I've got a bunch of Oklahoma one-liners, but I won't say those
Yeah,
right now.
we have a PG audience here, Tim.
Yeah, I was going to say some of your old dog listeners would really appreciate them, but others wouldn't. I would say, and it's because my whole career was in entertainment, hospitality. You can build the most wonderful place in the world, but it takes people to make the dream a reality. Walt Disney quote, but it takes people, right? It's at the end of the day, it's about the three of us and people building a process and a team and working together.
That's great quote. So here's my final question. This is sort of our apocalyptic question here, that everything that you worked so hard to develop, every asset, personally and business-wise, if it totally got wiped out and all you had was $1,000, what would you do with that $1,000 to rebuild your real estate empire?
That's a great question. I have not heard that one.
Wow.
You know what I would do? I would use this. I know exactly what I'd do with this. I'd use that $1,000 to have many dinners and lunches with people, because the key to growing a business is relationships, number one, trust, and you only get that by looking somebody in the eyes and knowing who they are. Yeah, I would spend it just getting out. If that meant an airline ticket, getting out to the people that I needed to connect with, that's what it would be. It wouldn't be anything physical. I think that one of the greatest things about Tim and I is with our investors or our vendors or anybody else, one of the first things we did was we went around personally to every single person, had dinners with them. We do functions and we pay for it because that's what we think we need to do, and that's how we develop relationships.
That's great.
Well, and it goes back, mine's going to be very, very, well, almost identical to that we put people first. We certainly put our investors before us. It's part of our mission statement, our core values. And, I would probably take that slide dial that Tom talked about with his favorite app. I would send out a voicemail to as many people and relationships that I could build upon, and telling me to meet them for breakfast or at Starbucks and tell them my tragic story. I'm wiped out. And back to build those relationships.
And start
back
begging.
To build those relationships.
That's probably what I would do.
and then I would make sure that J.J. Watt was on that. He seems to be a good builder of fun. So,
and bring pictures of your kids.
But it does come back down to relationships. That's been the one really takeaway from me coming out of a 31-year corporate career to this. And I've said it to Tom several times that I'm amazed at how important the value of a relationship is, and never ever ever underestimate it or take that relationship for granted.
No, great for sure.
Well, great.
Sure.
Good answers. Good answers. Well, I'm sure there's a lot of people listening that want to find out more about you guys and what you do. Where should these folks go to find out about you?
The easiest would be our website, which is napolicap.com. So that is NAPALICAP.com. They can email us at thomas@napolicap.com or tim@napolicap.com. I have a blog that is called The Passive Income Physician, and it's also used to be named, and kind of is still, Freedom in the Black, just because of our last name, et cetera. Mm-hmm. I'll also say, I know we talk about assets, things like that. We're always growing our list, and whether somebody is interested in investing or not, we're still happy to talk to anybody. We love doing it.
Wow, that's great. Well, thank you for making yourself so accessible. That's fantastic.
And thank you for hosting us.
Oh man, are you kidding? This was all my pleasure. We did pretty good for having three guys on the call here. We definitely ran a little long, but I could have run another hour. One of these days, I'm just going to do that. I'm just going to
just do a volume 1 and
we actually have done two-parters, but I'll tell you, this was a great call. I'll probably want to call you guys back later on and see how you're doing. Do a little update here on the latest of your schemes out there. And
we've got one. We just landed one on Friday, so now we got to start the process all over again in Dallas. So
God,
we're pretty excited.
That's fantastic. Wow.
Yeah.
Well, you're not quite finished yet. We do have this tradition here that all of our guests have to partake in, and it's called the closing howl. Okay, and it's not just any howl. Okay, we actually have a contest at the end of the year. We listen to all the howls that our guests have done, and we give away an award. It's called the Golden Howl Award. Yeah, so you've got a little advantage because there's two of you here, but and you also have an advantage because you're kind of like good old boys. You know what a hound dog howls like. Okay, living in Oklahoma, Texas, those areas, hunting dogs are all around. So you guys definitely know what a hound dog sounds like. So
this is a great wolf howl. This ought to be all Tim.
Yeah, I was going to say we had a great wolf howl. They do have one.
Well, this is it. I'm gonna let you guys do this however you want to. It'd definitely be great if you both tried to howl together, but it's up to you.
We have to.
All right, you got to. So let's go ahead. We'll close our show out with your closing howl here.
All right, Tim, and three. Right. How about that? 3, 2, 1. Oh, no, you didn't do it. That's awesome.
That was great. Kind of starting it off and moving into this like off on the hillside, kind of howl. I mean, that was great. I pictured the full moon, and the tortoise hare walking across with the moonlight in the desert. Okay, enough of that. All right, guys, thank you so much for being our guest here on the Old Dogs REI Network. We really
thank you very much for having us, Bill.
Oh,
really.
We
appreciate it.
Been my pleasure, totally. I also want to thank all our Old Dog listeners out there, too, for joining us. I know there's a lot of other things you could be doing right now, but the fact that you sat here and listened to us, three crazy guys here, means a lot, and we really appreciate that. Please note everything we mentioned here, including some of the links, the websites, how to get in touch with Tim and Tom. All of that will be on our website at olddogsreinetwork.com/blog. And just look for the episode that's got Tim and Tom Black on it, and you'll be able to see all those great links and just click right straight through. So that's the show for today. Remember, cash flow is king, and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.